Yeah.
Okay, we are at 4:01, so we'll get started. I will just start by introducing. We are going to be going over selling your home in 2021. We are here with Phil Rodocker, 30-year real estate agent with John L. Scott, and Doug Moore with the More Than Mortgage team at Caliber Homes. And I will let you guys get started. I will mute.
You're muted. Okay. Hello, everybody who's out there. Cassie's our moderator, so she's watching. We got a deck that we're going to go through today, but a little bit about myself. If you don't know me, so a lot of the people that got invited today already know me. So there's not a lot of introduction I have to do to myself. Doug Moore, he's been working with us now, doing a great job. Our clients are loving the work that he's doing for us. And so we decided to team up today. Now on Doug's side, he's working with the buyers, and this is more of a seller class. But there is need, right? There is need on the listing side to have a lender in your pocket to ask questions, because through this process, you're going to be curious about your buyer that's purchasing your house. You might even be curious about your next house, right? And where you're going and what you're going to do and how that looks like. Now, I bring this up and I want Doug to be here because I'm going to give you a little story. And it's a story about me with a buyer going and showing a property. The seller put the house on the market because they're going to move, but they did not get qualified first. All they knew is they wanted to move and they're going to worry about getting qualified later. And guess what? We bought the house, we put an offer in on it, we did the inspection. Then they went out and talked to a lender, and there was something on their credit that prohibited them from buying. And then you go, uh-oh, now what? We have a buyer that has already purchased your house. You have already signed a contract. You have already accepted earnest money. Inspection's already done, and you can't buy on the other side. That was very scary. Unfortunately, because of where we were in the contract, the buyer still got to purchase the house, and the seller had to move out, and they had to rent temporarily until they could get their credit repair done. So it's always good in this process, if you're thinking about selling your house right now, to talk to a lender first. Even as a seller, you want to talk to a lender first just to make sure you're prepared for that next move. We don't want there to be any kind of hiccup there. And I don't know, Doug, have you had any problems in that area at all? Have you seen anything or heard anything like that?
Absolutely, Phil. I mean, I think, my suggestion always is it's never too early to make sure what your pre-approval status is. Never, because there's no cost to do it. There's no obligation. Frankly, it doesn't even take people that much time to do a loan application, have us pull credit, the key documents, and then to really know. And the worst scenario is what you're describing, where people thought everything was fine. And I could give a whole slew of similar stories where something that often can be fixed, sometimes takes more time, but had they started earlier, it'd be a non-issue. And then it's, of course, in that moment when you're wanting to buy, and now there's something with your pre-approval. So we always say earlier the better. Absolutely.
Okay, excellent, excellent, excellent. Okay, so now the thing that we're going to talk about here is a little bit of our background. Not only am I a real estate agent that helps sellers sell their houses, but I've got certain certifications that can come to our aid, right, as we're going through this process. First thing is I'm a certified selling marketing specialist with John L. Scott Company. I'm also a certified buyer's representative specialist with the company too, so I understand the buyer's needs and the nuances they go through. I work a lot with first-time home buyers in the marketplace and second-time home buyers. I do a lot with investors. I work good with exchange facilitators. So if we're doing an investment property and you're selling one of your investment properties, let's say it's not your primary residence, it's a 1031, we have to go through an exchange process. Okay, I can help you with that. We've got exchange facilitators, and we can talk a little bit more about that. And oh, by the way, while we're talking here today, if anybody has any kind of questions, they want to put it in the chat, feel free. We'll answer the question. So if I say something like 1031 exchange and that you don't understand that terminology, or if there's anything that you hear from Doug that just didn't sound like you understood it well enough, just ask us and we'll elaborate on it more. Other than that, we're just going to kind of go through and talk, but we'd love to hear from you. We like the feedback and we like to engage as much as possible. Okay, so 1031 exchanges are for investors that need to exchange property that's trying to escape their capital gains, okay, taxes. So we'll talk more about that if needed. I work with divorce situations, liquidations, if there's estate sales, if there's any kind of inheritance that are going on, any foreclosed properties. So there's a whole lot of different types of properties that I manage, and pre-foreclosure. So if there's anybody that's got into this COVID, and you got into this forbearance, and you're curious about what's happening with the forbearance laws. They're changing all the forbearance laws right now. Back when COVID first hit, back in March of last year, nobody knew what to do. But the government felt that they didn't want to displace people from their homes. So what they did is they put on a moratorium on evictions, and they put a forbearance. So those are the terminology. So you have a moratorium and a forbearance, and they're both different. A moratorium is for renters, okay, and paying rent. You don't have to pay rent right now under the moratorium laws. A forbearance is that the banks cannot force you to make payments right now, okay? They've extended that from March. They did it out to, well, it didn't even happen in March. I think they started doing it like in June, and they put it out to October. Then they moved it to December. Then they moved it to March of this year. And we just got word today that they've moved it out to June 30th. Okay. We don't feel they're going to go any farther than that, because now they have the vaccine out. We're getting into phase 2, and they feel like they're going to start phasing that out. So if there's any questions around that process, around the moratorium or the forbearance, and you want to talk more about that, feel free to raise your hand. Happy to talk about that. But right now, today, this class is primarily what's happening in real estate, what's happening with the housing market, how's the multiple offer situations working, how did we get into this situation, and what's the outlook for the next 30, 60, 90 days. And that's where we're kind of going to go with this. But if there's anything on the side that you want to talk about, happy to help. And Doug will explain his side.
Yeah, so I think, specialties, I guess we hope our specialty is that we're helping people get financed for homes. And of course, right now, people that own homes have or are looking to refinance that and take advantage of rates that are lowest in the last 60 years. So we hope our specialty is just purely around helping people where they are, what they need to buy a home and finance their home. I have CPA after my name, by the way, because that's part of my my credential from in my career, and that comes into play, frankly, a lot when as a loan officer and talking to people about different financial strategies, and even things that are broader, not so much in advising, but in asking questions. And obviously, we want to point people to professionals if they want a financial planner or so on. But I'm very comfortable in having those kinds of conversations. I mentioned first-time home buyers in the bullet points because we know we do a lot of work with first-time home buyers, and we kind of dug through the data the last few years and found that it was more than we even kind of had in our mind, that it's almost half of our clients that were first-time home buyers. So that's a place where a huge amount of education support is needed, and as a lender, we feel really excited and comfortable to do that. We like to think we get great marks on our customer service. And by the way, Caliber, we'll talk more about Caliber later, but I'm licensed along the West Coast, and again, Caliber is a nationwide lender, so I can help people financing their home anywhere in the country.
Okay, that's excellent. Okay, so in the world that we're in right now, in the COVID world we're in, we have to follow the guidelines. So when we put a property on the market, there's certain guidelines that we have to follow. When we were in phase 1, it was like no open houses, nobody, to go to the house without having it pre-registered. They had to follow, certain COVID, guidelines, could only have 2 people in the house. That's one buyer and agent at a time, very strict. Since that time, they have, I guess, relaxed the guidelines, and they've relaxed it a little bit. They started with this, I think it was 1.5, halfway between 1 and 2 on the opening. They were allowing open houses in a limited capacity. They moved the people from 2 up to 4. And now we're in phase 2, where we can have open houses now, and we can have up to 10 people in the house. So they're allowing more people in the house. In-person showings, meetings. We need to do our showings. We have to register for that. And we do it through a process called showing time. So everybody registers to go see the house through a showing time portal, so nobody overlaps. We've been doing that pretty frequently, and it's been working out pretty well. There is a little bit of frustration with the showing time when you're trying to go out there and look at properties, because agents will block out 4 hours for an inspection. Well, that blocks out everybody looking at the property, right? Because they can only have, the person that's buying and the inspector there and their agent. So we're still working through that and how we can, settle what's best for everybody. We're in a very, very competitive real estate market right now. It's extremely competitive. So when we put a house on the market, the average market time right now is about 6 days, 7 days. It's the lowest I've seen it in the history of me working in real estate. When you look at real estate, you look at the absorption or the percentage absorption of house sales in the marketplace that dictates, the control and what the control is. And we'll talk about that later on down the way. Right now, few questions that come to mind. When is the best time to sell? I'm going to show you that on a graph. There's a 5-year trend graph that I'll show you when the best time to sell is here in a second. How's the market right now? Okay, here's what we're dealing with in real estate right now, or in the market right now. In real estate, it's supply and demand based. So the more inventory you have, the more supply you have, it shrinks the demand. Excuse me. So if we shrink our demand, then we have more time and there's not as much competition. Okay. So the market right now, we're in very short supply. The things that are happening this year that we hadn't really been dealing with last year, it was building up last year, but it's more evident this year, is there's more people that are getting assisted living from home. They're not going to assisted living homes anymore. They're not doing that communal assisted living. They're actually staying in their houses, and they have visiting angels, or they have family, or they have somebody caring for them. So when you look at the cycle of real estate, you have the first time home purchase that you make to get to springboard you into the house that you're going to raise your family, that brings you into the house that you retire in, that brings you into ultimate, final destination. So it's a 3-home process is the average person. Now, some people buy more, some people buy less, but average, that's the cycle that we see. What we're seeing right now is that we see that last cycle not happening. People are staying in their houses. The other thing that's great about technology and science is that we're all living longer. That's great, but it keeps people in their houses longer. So we have like a little bit of a blockade at that last step. And if that last step blockades, then what it does is it blockades that second time buyer moving up, and it blockades the first time home buyer. And so we look at other sources to get our inventory, right, to sell to the market. The other biggest, fastest moving inventory market that we had over the last 5-7 years was flip properties. Houses that had been, distressed, and then the investors would come in and repair, and then we'd enter those back into the market. What happened with COVID, and we talked about this a little bit earlier, we touched on it, is that they put a moratorium in place and they put a forbearance. So unfortunately, when people get in a situation where they have to, job loss or whatever it is, and they can't afford to keep their house, they move out, and that becomes a house available in the marketplace. But the government now is saying it's okay not to make your payments, and it's okay not to pay your rent. So what it did is it basically stopped that foreclosure market, right? There's still some going on, but it's very limited. It's like only a tenth of what, or not even a tenth. It's fractional of what it was. So there's another market that has disappeared. So that was a potential opportunity market for the first time home buyers to enter into the market, into a house that had been renovated. That's not there for them now. The move up buyers not there now, and the builders that are building, the permit process is so far out. It's taken them a long time to get these houses done. We're seeing right now, when we look at new construction, and I'll just use Lennar building right over here on the other side of town. I went in with a client to try to make an offer on one of their properties, and they said, yeah, no problem, you're 15th in line, and the actual plat, the plan that you're looking at, will be available in 2022. Okay, well then so there's a market that we don't have, unless we're going to wait a year to get a house, right? So we've lost out on that market. And I know the builders right now, and you see some of the grounds being broke here, broke there, they're scrambling to get it up, but it's a very slow process. So the avenues that we've had for getting our inventory has shrunk. The other thing that's shrunk in our marketplace is the relocation market. More people now are working remotely from home. So companies like Amazon, and you got Microsoft, and in our area, you got, Costco. Costco's a little bit more old school. So they want people to come back to the office. But you got like Starbucks, and who's the other one? UPS. These are all corporate headquarters here. They're allowing people to work from home. Insurance companies, mortgage companies, like Doug, you can be away from home. Me, I have to be close to home because I help clients out in the field. but just to know that there's other industries around us, insular industry, they're saying you don't have to move out of your house. And so we're seeing more buyers actually convert their homes into home offices slash schoolhouses slash home. Everything's kind of happens in the hub now. So we see more pressure in the suburb, in the rural markets. Now people are moving out of the urban areas and more into the suburban areas because they're looking for more space, bigger houses, and places to, you know, to educate the kids and have their home office. So that's putting pressure on our market. And so that's it. So if you say, what do we need to do to get our house ready for market? If you're thinking about coming on because the inventory is so limited, the thing with COVID and what we're seeing more of is that it's got to be in a market ready condition. And what do we say? What do we mean by market ready condition? Market ready condition just means that it has to be ready for the visual aspect of the clients to see and to be able to, you know, be able to feel themselves in the house without ever going to the house. And the way we do that is multiple pictures, professional photography, but video marketing right now is really big. Our team has been doing video marketing here for the last year, and it's been one of the best things that we've done. The clients are loving it. The buyers go out, they see the property, but then they have the video to fall back on to see the house after the fact. And we have been able to secure more closings based on that video marketing. We had one house we put on the market and the buyer said they watched the video 5 times before they made their offer on the house. That's how important it was to them. Okay. And then finding out the value of your home. Now there's a couple different websites where you can go. We go to Redfin, we go to Zillow. The thing we have to remember about the websites, and we have one of our own, it's called Buy Side, which I'll show you later and explain to you how it works. But the thing is, when you go to an online service to get your evaluation on your property, it's a 50-foot approach, right? They're looking at it from the sky down. They're not looking at the nuances of the property, capital improvements. They're not out in the field with the buyers every day. All day today, I was out in the field with the buyers. I was showing over in Normandy Park, Burien. I was over on that side of town looking. Tomorrow, I'll be looking at property over in Kent area. I've got stuff that I'm doing out in Maple Valley, up in Bellevue, Renton, everywhere in the whole corridor. People are moving everywhere. So I'm in and out of these properties all day long. So having somebody that looks at so many properties, look at your house, can give you a really good idea on value and what's happening. The other things that's happening is we're networking a lot with the other agents. So the top agents right now are communicating with the other top agents about what they're doing and how their market's going, what we see the valuations doing and what we're faced with, right? Doug will talk about this in a minute here, but there's things that are happening in our marketplace that we haven't dealt with before, like appraisals, right? Low appraisals, but not only so much low appraisals, but we have appraisal waivers going on right now. We have drive-by appraisals because of COVID. The appraisers aren't even going in the houses. So there's just a lot of changes that are going on that the agent that comes to your house can help you be prepared for and to get ready for. And the other thing too is that when you get into the appraisal process of the property, we want to make sure that the house looks really good and it's staged, because guess what? The appraiser, and we're trying to get a higher value in the marketplace, the appraiser is a human being and they look at the condition of the property and they base their evaluations off how we present the property. So staging right now is key in the marketplace because we're pressing our evaluations and we want those appraisers on our side. So we have full staging teams that come in and stage properties for the buyers, but not so much the buyer because it's so quick. It's really for the appraiser to get your valuation up. So we got to make sure that we keep that staging in the property till after the appraisal takes place. Then we have the opportunity to remove it if we want to. Now, selling time is really community to community. Some communities it's 1 day, some communities 2 days, some communities it might take 2 weeks. Just depends on where you're at and how far out you are. If you look at the centers, right? So if you look at Bellevue, Seattle, Tacoma, and then how far away you are from there, the farther away you are from there, just a little bit more time it's going to take. But right now in the basic suburban area, we're finding priced right houses that are well staged and marketed correctly are on the market for less than a week. Now, just on the market for less than a week, just remember that it takes 30 to 45 days to close. So don't panic. You're not out of your house in a week. It's just that we have a secure buyer within that first week. And then we work towards the closing and in the transfer process after that. And that could take 30 to 45 days, depending on what type of financing you have and what the buyers need for their move time and what you need. But we work it all out. So it's good. Question that we have here is, what's my responsibilities when my home's listed? The responsibility is that we're a team. And so the responsibility of the agents are to market the property, showcase the property, get the buyers to the house, get secure financing, get a buyer in the property that's going to pay the price you want. Your responsibility is to keep it in show condition until we've accepted that offer. So the recommendation of the agents will be to do, X, Y, Z to the house, to the yard, make sure the yard's landscaped, everything looks good. And then you keep it that way until after we get that buyer. That's the real responsibility that the homeowner has there. Now, how will we get the home sold? We'll talk more about that here in a second, and we'll talk about more. So first thing we're talking about here is market. Okay, this is a 5-year graph, and anybody can go here. If you look at the top, it says Alan Pope. Okay, Alan L. Pope. Take the L out of there. So AlanPope.com and Associates. Who this is a marketing appraisal company. So they're appraisers in our marketplace. And what they do is they keep track of the inventory and the sales that are taking place in our market. And if you look on the bottom, that red line, that says net pending sales. The blue line on there is inventory. So you can see that today, if you come all the way to 2020, that our inventory and our sales, right? Our inventory is very low. If you look way back in 2015, we had the same basic problem. 2015, 2016, 2017, we still had the same lack of inventory. The only thing that's different about here and there is that we don't have property backfilling, right? We don't have the backfill because the elder community is staying in their houses. So it's creating this backlog backwards for the first time, second time buyers. Now, if you look at 2018 and 19, you can see that blue line going up. That was new construction coming on the market. So we had a nice set of new construction that competed with the resale properties. So if you say, when's the best time to come on the market, you can see through this graph that in the first 2015, the first 3 months, it's very flat, and then it picks up. September, that big blue line on the top, it says 4445 is when it peaks. So whenever that number is big, that's the peak of what it is. So if you look at the red one and see where that peaks, that's 4459, but that's way back in April. So buyers peak out in April. So if you follow that big number, you can see that April it peaked out. If you look the next year, it was January, February, March, April, May, it peaked out. The year after that, it was January, February, March, April, May, June, it peaked out. The year after that, it was January, February, March, April, May, June, it peaked out. January, February, March, April, May, June, peaked out. January, February, March, April, we had COVID, it went down, and then we peaked out late, clear in September. So we had a late run this year because of COVID. Everything slowed down at the beginning of the year because we needed to get our footing. But if you look at the graph historically, it shows that if you're a seller in the marketplace, the best time to be selling your house is between January and June, because that's when you have the greatest amount of buyers in the marketplace buying. And people ask me, well, why is that? Why is historically between January and June? Because if you look at the buyer, what happens after June? Kids are out of school. What happens after June? The sunshine comes out. What do people do in the sunshine? They play. So there's just a big distraction in the summer, right? All the events are going on, all the stuff at the parks are going on, all the water sports are going on, barbecuing, friends over, all that happens from June to the holidays. And so that's why you see the downward trend with buyers, because it's not that they're not there, they're just distracted, which is normal. If you look at inventory, same thing. When does inventory peak out? It peaks out in September, August, September, because people race in the spring to put their houses on the market. And then when after summer's over, they don't want to go through the holidays on the market, they take their houses back off the market. So if you're a seller, if you say, when's the best time to be on the market? January, February, March. And we're kind of at that point right now. That's why we're doing this event right now, to show you and illustrate that this is really the best time to be on the market. Most people think spring and summer because our days are longer, hours are longer, but it's you're going with the masses. right? What we're trying to say is you want to take the 180-degree approach, come on early, so you can get in that, what we call demand frenzy, to get that higher valuation. Because as we go in closer into spring, as we get out of winter and into spring, we're going to see more inventory, as you can see here, coming back on the market, especially now that people are feeling a little more comfortable about people coming in their house. Now, this big graph up on the top in the corner, that's what's called our 24-hour watch or our 7-day watch. So in the multiple listing, that's an overlay on there. The 7-day watch on there, it showed that there was 1,350 houses that came on the market, 2,162 sold. So it's hard to sustain that because you have 1,300 coming on the market, but yet 2,000 selling. I mean, how long can you keep that up? Well, today I looked at the report, and guess what happened today, you guys? Inventory went over pending sales. So as of today, our inventory overlap sells, which means we're going to start seeing more houses come on the market. We see more houses come on the market. What happens to the value? It softens. And so if we're trying to get the maximum amount of money out of the house, this is the time to do it right now before we see that. If you look at 2018 and 19, which are more respective of the market, before you see that blue line go up. And so that's kind of how that works. Now, when you look at getting your house on the market, you're here today because we're doing a home listing seminar. There's things that you do to get ready to go. Okay. There are steps after you make the decision. First step is you get a hold of a knowledgeable and a trusted agent in the marketplace. Myself, I've been out here for 30 years. I've been at John L. Scott for that amount of time. I've helped tons and tons of clients. Like I said, people are on today. They're with me some capacity, so they already know me, which is great. And if you've been invited by somebody else, welcome, right? So here we go. But the first thing we do when we list the property is we want to provide you with a complimentary detailed competitive market analysis. Like I said, you can go to Redfin, Zillow, but just know when they're on there, they give you a number and they give you a range. Our job is to zero it in and say, okay, on the range, where do you actually fit? And so that's my job to help you with that. And that's called a competitive market analysis, or a CMA. Okay, then we make sure that your house is priced right. Then when you say, okay, once we got that figured out, and we'll discuss things like, how to get ready for the market, staging. Do we need to bring a professional stager in? Can we work with the furniture you have? How's the yard look? Do we need any painting? Anything like that? We've got programs in our company where we can actually front the money up front if you need that to get the house prepared to come on the market. Then when we get the market ready, right, we provide you with a home warranty, because a lot of the houses today, the buyers are foregoing inspections. And I don't know if that's the safest thing. I mean, it's good for the seller, but I mean, if there's anything that's wrong with the property, it could come back to us. So I say, let's give them a home warranty. Let's cover the mechanical items in the house. And then, that's peace of mind, right? And then we go, the decluttering, we talked about stager, with all that. Curb appeal landscaping is very big right now. I just did another talk just a couple of days ago about curb appeal. When you come out of the winter months, the house in the front looks like it's had, 6 inches, 8 inches of snow on it, and, everything builds up. So the outside of the house is equally as or more important than the inside. And I'm going to use the example of the houses I showed in Berrien today. 2 of the houses did not have the outside done. 1 of the houses had the outside done, and the buyer instantly was attracted to the house with the landscaping done before they ever went inside. Okay. And that's the 45-second approach. When the person walks out of their car, they already formulate how they feel about the property before they ever go in, because the outside is a reflection of the inside. So the more we can make the outside look good, the better the buyer's going to feel, the faster that's all going to do. Then when you say, okay, well, we're going to go on the market now. We got all this stuff taken care of. What we go through is a listing agreement, talk about what that is, disclosure statements. In the state of Washington, we have a disclosure statement. It's called a Form 17, and that is your knowledge of the property to the best of your ability. If your house is done, built before 1978, we also have a lead-based paint disclosure that we have to give to the buyers to let them know if you have any knowledge of lead-based paint in the house. And so that's really it. There's not much more on the forms than that. And then we move right into the photography, videography. We put together the unique listing pages for you. We do all the signage, flyers. There's levels. There's different tiers of marketing. We have the John L. Scott marketing. We have the executive or exclusive home marketing, and then we have the what's called Lux Home. Just depends on where you fit in, and all those will be presented to you wherever they're at. So that's where we go. And then we go live with social media. Now, when we talk about getting the house ready, a lot of people go, okay, love to get it, but we don't have the extra resources right now. We don't have, the funds, and, might need major repair, and that's okay. What our company came up with last year is what's called Market Ready Plus. And this is a little illustration, a flow chart of Market Ready Plus. And what we do with Market Ready Plus is we actually help you get your house ready for market. The only criteria to this program is that you have to have 15% equity. So when I do the market analysis on the property, we look at your mortgage statement. And if there's more than 15% equity in the house, the company will cover 3% to 4% of the repair costs, no payments, no interest. It's not even reported on your credit. That's not even a part of your loan. It just gets paid at closing after it's done. So you get a zero interest loan for the company with no payment. So basically we're fronting that. And if you look at a house, and let's just use an average price. Let's just say that the house is $600,000, and let's say that you have $200,000 worth of equity in the property. And if you're at $600,000, we could get you $18,000 to $20,000, sometimes $22,000 for repairs. That can go a long way. And it doesn't come out of your pocket, and it doesn't cost you anything to get. So we say, why not take advantage of it? Save your money. The lenders need to see you source your money. And I know that Doug will talk about that. They don't want to see money moving in and out of your account. And if you're going out to purchase a house, you need to sell your house, and all of a sudden $22,000 goes out of your checking account. They're going to ask why. Doug will talk about that in a second. We don't want any movement like that. So what our company does is we move our money for you. And that saves you a lot. And then we have an illustration of where I actually helped a client do this. We put 45,000 into this house. So if you look at the nook, the kitchen, and the living room before, you look below, that was the after effect of our program. And it was no money out of their pocket, no interest, no payments. And we turned that before house into that after house. And the idea behind the Market Ready is that we want to see you get 2 to 3 times return on your investment for the money you put into it. And we did just that. This house, I believe, when we got it all said and done, we sold this one for, I think it was 40,000 over the list. So we doubled it, their investment back out of it from where they were. So that's very nice. Okay. Now, the other thing that we have going at our company right now that's unique this year that we just put into play, it's called Instant. Did I say that right? Instant Purchase Plus. Okay. Now, what Instant Purchase Plus is for you guys is anybody that says, hey, I don't want to go through it. I don't want to spend the time getting my house ready. I've got equity. I know where my equity's at. I'm not really worried about trying to get every dollar out of the house. I just want this to be easy, seamless. This is like estate sales, things of that nature, or anybody that just has, been in their house for a long time and they just said, hey, make it as easy as possible. Our company will actually buy the house from you so you don't have to go on the market at all. And sometimes that works out really well when you're trying to buy a house because you can go into the listing knowing you have a buyer for your property. You're not contingent. And right now, contingencies, and that's where you have a house to sell in order to buy, are frowned upon. As a matter of fact, if you have that, it puts you in the weakest possible position because the seller of the house that's ahead of you has to wait for you to sell your house, which makes it difficult. So we enacted this program, and it's been very well received with our clients because they can go in and be non-contingent on their next purchase. So just know we have that available for you. Really good. This right here we're showing you is a copy of my website. And what we're really trying to show you up on the top up there is the full marketing presentation. The full marketing plan is available right on our website. So if you go to philr.johnlscott.com, this page will open up and you see right on the top, it says selling a house. You can download the whole listing presentation right there before I come over. The other thing that's cool about our site, if you look on the side over there on the left-hand side, it says access your instant home evaluation. So just like Redfin, just like Zillow, we're doing the same thing for you. We're doing a home evaluation, but we're doing something a little bit different than them. And that is we're giving our agents a place to register their buyers. Now we know right now we have more buyers in the marketplace than we do sellers. So the buyers that are out there that haven't found a house have to go somewhere and they have to get themselves registered. So when the house comes up, they get access to it as soon as possible. So instant access. So Cassie will move this up here and we'll just take a look. We come up with the evaluation first. So we take your address, we put it in, and you can do this by going to my website. You can do it yourself. So if you go into the website, you click on that orange tab, you put your address in, it'll give you an evaluation. What it does, it takes Zillow, the appraisal, and I think it's home valuations. And you look at those three and it kind of gives you an average. And then the cool thing, if you go down, you'll see that it narrows it down, talks about the backlog of buyers that are out there, where they're at, it comes down. And on this house that we use for this illustration, I know right now that if that house came on the market, and that's a house that I know, that house comes on the market, I've already got 119 buyers available for that house. So when you put your house on the market with us, we can go through the same process. And then all these buyers are registered with agents. You can see the registration number down there. I can get a hold of these agents through their registration and let them know your house came on the market, and they're going to send it to that 119 buyers right away, instantly. So it's instant marketing to the buyers that are out there. And that's how we start bidding wars. Okay. So any questions out there right now? Is there any questions you see, Cassie? Anything going on?
Nope, I don't see any questions right now in the chat bar, so we can just keep going.
Is it that good or that bad? Huh? Yeah, whatever you say. Okay, let's keep going. Let's see what we got here. Okay. So here we go. So this is our listing website. Now, we talked about the multiple pictures, we got all that, but then we have the video tour. And the video tour is right there. You can see that there's a narration that I do in the beginning. So in the beginning of the video, I do a narration about the property. So it's just a curbside conversation about what they're going to find in the property. And then when it gives a full walkthrough on the house. Client over here in Maple Valley went on my website and he looked at these houses. He loved it so much, he watched all of them. And the only comment he had is, got to change the music. That was the only, because we have a music background on it. He said, change the music. But other than that, he liked it so much, he actually listed his property with us because of these videos. So they're good to watch. You can get an idea of what the buyers are going to see on your property. They're, right on our website, and they're very, very well received. So we do virtual tours. We do all the listing photos and then before we receive any offers on the property, okay, we're going to be working hard. We're going to make sure that you're on Instagram, that you're on Facebook, that you're connected to LinkedIn, Zillow, Twitter, all the different marketplaces, right? Google is really big right now. So we're doing a lot of Google advertisements, right? And so we're going to keep you always updated on what's going on. And we're doing what are called market reviews, right? Or offer review dates. And so the offer review date could be 5 days or 7 days. And while we're doing that, we're collecting all this data before we look at their offers. So we collect, all the offers. Could be 3, 5, 7 offers, could be 2, could be 1, but we're going to collect the data from the marketplace. We're going to look at what people are saying about the property through these social networking posts that we put up. And then we're going to bring that information to you as well. Right. And so it's very powerful what we're doing before you receive your offer, and it works really well. Okay, so after you receive your offer, let's say that we get to the one that we like, we're going to negotiate and accept that offer. Then we're going to clear all the contingencies that come on the house. Okay, right now we're not dealing with a lot of contingencies or inspections, but we're going to clear all the contingencies and inspections. Then we're going to go through a title review. Now, the thing to remember about title, and Doug will tell you this too, is that title isn't on a house, it's on a person. Okay, your house is your security instrument. And what the title does is it shows that if you have any judgments, if you have any liens against the property, if you have any back taxes that need to be paid, if there's any HOA disputes, that's the kind of stuff we see. And that's more a person than it is a property. The property is just the security instrument that all these things are attached to. So we want to review that to make sure there's nothing on the title, that the title is what we call cleared. There's no clouds, that it's cleared, and that it can be transferred to the next buyer without problems. Then we're going to go through the financing and appraisal process with the lender. Okay, so the lender's going to help us there with that and how that works. Then we go through escrow. Now, there's 2 types of states. There's what we call an attorney state and an escrow state. We are in an escrow state, so we do not use law offices to close transactions. Some states do. We go through an escrow company. Escrow company is a third entity. They're non-objective. They're just there to do the paperwork. They have a limited practice license to make sure that all the paperwork is done correctly and that it can successfully close with whatever lender's being chosen. So when we get to escrow, Doug's done all his work, I've done all my work, and they're the last part of the puzzle and they have us stand back and allow you to go in there and to sign and get it to closing. And so that's escrow process. And then we hit our closing date. And so we're either handing your keys to a new buyer, or we're handing new keys to you because you're the new buyer because you just sold your house and you bought a new one. And it's a fantastic process, and we do it every day. And we've been doing this for a long time. So if you have any questions, you can put them in the chat box. Cassie will look at them in a second.
Yep. So if you have any
You can raise your
questions,
hand if you want to. Like I said, happy to help. Been doing this a long time. That we're doing the seminar right now about listing because this is the right time to be on the market. And so let's get out there. Let's see what we can do. And I'll let Doug jump in now, and he can talk about the financing side.
Yeah, thanks, Phil. So just, I did a brief introduction at the beginning, but to highlight, I'm with Caliber Home Loans. Caliber Home Loans, like John L. Scott, we're the largest lender in the state of Washington, largest in King, Pierce, Snohomish County. It's measured every month by volume. And frankly, in most months, in any of those measurements, Caliber's number one by a factor of 2, and usually the large banks are behind us. So why is Caliber so large? It was a longer story, but Caliber just has a really strong presence in the Northwest. We're a nationwide lender. We're in all 50 states, but again, the Northwest is such a strong area for us. And so when our clients are putting in an offer and our pre-approval letter is going with the offer that Phil's making, we know that the listing side, as Phil's talking about now, and he can jump in on this, looks at a number of things, certainly all the parts, aspects that are of the offer, but who's the financing and what's the risk or likelihood that financing is going to close on time. And again, our market position, we believe, speaks to our ability to close on time. And we know that that's absolutely critical when your earnest money is at stake and there's other buyers that are waiting to take that property, or other people in line to take that property if for some reason it doesn't close. So that's huge. By the way, I always call the listing agent to talk about our pre-approval letter after it's been submitted by again, a realtor partner like Phil, and make sure that they understand all the things about us and about our client and our process. So that's a little bit about who Caliber is, and so in terms of the pre-approval process or the approval process, gosh, those of you that have bought a home before, you know this, so I won't belabor it too much, but there is a process of pre-approving, and we use the term pre-approval only. And what that means is our team believes that we've done everything that our underwriter, and underwriting is the decision-making and approval process ultimately in the lending institution. But we've done all of that same work so that we're as close to 100% confident as we can be with your pre-approval that financing will be closed and completed. And so again, the steps in the process, of course, there's loan applications and reviewing documentation, going back and forth with you, and then there's usually an education process as part of that pre-approval work that we do. And then the approval process then happens once you're in contract, there's a property, and we're moving in the closing process that Phil was alluding to. So I think maybe the next slide mentions a couple things on that I just mentioned. I mean, there's very basic documentation that's required. By the way, Caliber, we believe we're on the leading edge of lots of things, but certainly of an electronic process. And so in every option we have from the very beginning of your online application, there's always an electronic version or approach or option for the verifications that we do. And then certainly for people that aren't comfortable with that, or maybe would rather do things in a more manual way, there's certainly ways as well. So this is a list of the basic documents that would normally be used in pre-approving, and certainly if people have other scenarios in their life, then there may be more extensive documents, and that's part of our iterative process of pre-approving. And by the way, I'll just mention on that, we put the term pre-qual. There are lenders we know that I believe, unfortunately, they use like some pre-pre-pres. So they've pre-qualled or pre-something, and then later in the process, like when you're in contract and it's most critical, then they actually do the pre-approving. And I know several horror stories where that happens and then a person's not pre-approved. So again, when we use simple, straightforward term of pre-approval. That means we've done our work. You can go shopping for a property with the confidence that your financing's lined up, and there's not something else waiting down the line that might trip you up. The right team, gosh, I mean, I just echoing what Phil's already said, but we know, we hear it from our clients from the listing side all the time. Having, a top realtor and a top lender is important now as ever, because the competition, and you as people on this call thinking about selling your home, you're going to take the most sure option, and that's not just the best price, that's part of it. But I'm certain when you're looking and you're talking with Phil, if there's, say, a caliber pre-approval letter from a buyer, and then there's an online lender or an out-of-state credit union, he'll say to you, why would we even take the risk? And that raises other questions possibly about the buyer. Why are they using that kind of a lender when there's much better lenders that are available? So I think having the right team and having you ready to go is huge on the buying side, or for you as sellers reviewing the offers that are going to come to you. You can go to the next one. So what's a forecast? Well, I'm no soothsayer or oracle in this, but I can tell you we read a lot in our role as being the experts on financing, and certainly we're in this. We've all gotten used to certain things with COVID, not probably what we want. One of the things we've gotten used to is now almost 8 months of interest rates that are lower than since like the 1960s, and even then there's different kinds of loans. So you have to really say we're at a totally unprecedented time, and this isn't normal, and this isn't going to last, because it's based on a lot of concerns, bigger economic concerns, obviously the funding, large government funding of keeping people afloat in their life, which I completely respect and heartbroken about, but that has provided an opportunity for low interest rates because of the concerns in the economy, but that's not going to stay. It's also, we don't believe, going to rapidly change. It'll be gradual as the economy gradually recovers, as unemployment goes down. There's already concerns this week though about inflation creeping up, and that's kind of the enemy of mortgage rates, if you will. So those are the things we watch closely, and I think a lot of people are predicting that rates will slowly go up. And I just put an example there, that maybe they're up a half or a little bit more between now and the end of the year. 2022 will be a different year, I believe, and I think most people do from an economic standpoint. After vaccine and things have happened to bring the economy back to something more normal, that we wouldn't expect to be at a historical low place for a long time. It just doesn't work like that, as nice as that would be. And certainly, if you want to look at bond markets and so on, I'm happy to have more talk with you about that, because we kind of do geek out on what's behind the numbers. I think on this slide, we're wanting to just bring up appraisal. And so an appraisal is an independent party that is licensed in our state to perform evaluation of the property, and they have certain specifications and rules and regulations of how they do that. And so we have to be completely independent from them as a lender, so we can't have any direct contact. And that happens through a process to, again, ensure that it's independent appraisal. So appraisal, is that valuation at a point in time. And what appraisers use is they start with the county records, and then they look at recent homes that have sold, not pending, but homes that have sold. And then they look at a lot of other economic data to kind of see trends and so on. And they can exercise a fair amount of judgment in that. And Phil mentioned, what the property looks like when it comes. Typically, the realtor or realtors might try to be there when the appraiser does their on-site inspection, which is a fairly brief thing that they do to validate what's in the written records. But that's an opportunity to make sure that they're looking at the right comparables or the best comparables for that appraisal. And in an escalating market, it's certainly always possible that those recent comparable homes that have sold were at a lower price than the rapidly escalating. And so the potential for that appraisal to come in lower than what the contract price is, we're seeing that happen some. knock on wood, we always want the appraisal to come in at or above the contract price. But if it comes in lower, then that just means from a financing standpoint, then you need to bring additional monies in to bridge that gap. And or there can be things in the contract, and maybe you want to touch on that, Phil, of the options in the standard purchase and sale agreement for an appraisal.
Let me jump in right there, because there is a part to that, and what's happening, and Doug's talking about it right now, is the appraisal process, right? And the banks look at historic information to come up with the evaluation on their property. They're looking over the last 6 months for sold properties. They need to find 3 in the area that are subsequently the same size, same condition, same location. They'll go outside the area, but primarily keep it within a 1 mile radius. So this is kind of what they look for. If they can't find the property, then they can go out a little farther if they can give what are called compensators. Like if you have a pool or if you're on a lake, they can go to lake type property. They can, if you have something, but if you're in a standard house, a standard neighborhood, they're going to try to get it within that 1 mile. If there's only a property out there, let's say that your house is on the market for 500, and let's say buyers come in and they bid it up to 525, and the appraiser comes out and they go, well, it's only worth 500, then you got a problem. So what the market has been requesting is that we insert what's called a 22 AD, and that is a guarantee of the value of the house. So it's saying that if a buyer comes in and your house is on the market for 500 and they're willing to bring it up to 525 because they feel confident, and if the appraisal comes in at 500, they have to guarantee that $25,000 for you. And we're seeing more and more of the 22 ADs, not only in our contracts, but almost a mandatory now on offers to protect the seller from low appraisals. Now you say, okay, what are the low appraisals we have? Last year, I think I saw 1 last year, and I think we did like close to 70 homes. So the odds were very low that you're going to get a low appraisal. This year, it's a different animal. And so a lot of the agents and myself, if I represent you as a seller, we're going to request, if they go higher than the listed price, to guarantee that they're going to be able to make that listed price work for you. The one I just wrote recently for a buyer, the only reason why they got their loan accepted from the lender is they wrote it was a $760,000 house. They put a $49,000 guarantee on the appraisal. So that's the margin the appraiser has, and the buyer said that they would pay for that if it came in lower. So that's what we're seeing pretty much on the regular basis right now. So that's the response I did.
And Phil, I think this is probably an item we're going to be talking about for certainly all of this year. And I think a lot of projections, again, are that the supply is so much lower than the demand in Puget Sound for all the reasons that we know. I mean, with vibrant, companies, people wanting to move here, renters wanting to buy, buyers wanting to move up, interest rates being, incredibly low. I mean, this competition driving that concern about the appraisal. So it's really important that a realtor, educates their client well on that. We do as well, but that's a huge function that you provide them. So that's great. People may have heard the term underwriting, and that's just simply the approval function within a lending institution. It's also true in insurance and other things. So some people get, kind of concerned with, like, what's this scary thing? It's just simply a group of people that are trained in that, and their role is, once we're in contract and we've submitted your loan now for approval, the underwriter is the one reviewing it to see that the home and that the buyer's qualifications qualify for that loan. And they come back to us with what we call conditions. It's basically a to-do list that says, here's the things that are needed to be done to get final approval. And some of them are just things that haven't happened yet. So it's a known to-do list, like we'll get final title insurance, we'll get the appraisal back, those kinds of things. And so it's really our job, my team's job, to check off that to-do list. And it's an iterative process. Sometimes we need some updates from the buyer, but there's really not a lot of mystery to it. And that's just what that function is. And we're fortunate that our underwriting teams are right local here in our main office. And well, they would be if we're in the office, which we haven't for about a year, but in our Kirkland headquarters for this region. And so I've got ongoing, I have conversations with underwriters regularly if there's items that were, you know, problem solving. So it's not a black box whatsoever. It's a known people, known quantity that I go directly to. You know, the title and escrow function is that other party that's selected by the seller of the home. It can be certainly negotiated, and it's you know, they tend to be large companies that you've heard of in our area: Chicago Title, CW, First American, Rainier, and but there can be smaller companies as well. And their function again is being that intermediary for both the monies and the documentation. It's a critical function. Sellers are paying for it, buyers are paying for it, both sides pay, and so you know, having a strong company that provides that service and does it timely and well, and we work directly with them through the closing process. Types of loans, I mean, these are probably familiar to everyone on the call, but you know, if I was drawing the circles, the biggest box would be that conventional loan. That's what most, and there's those limits are changing all the time. In our King, Snow, Pierce County, it's 776 250 now is called the conventional high balance conforming loan limit. And if a loan is over that, then it would be a jumbo loan, and they have different characteristics for getting approval and hurdles. And then the government type of loans like FHA, VA, or USDA are available to people and are certainly helpful in certain scenarios. It can be where there's credit. If you're a veteran, I mean, it's a fabulous benefit. You can put zero down and get a home loan in honor of that service. So anyway, happy to talk more about those things, but that's the loan types. You know, credit score is a big item in determining your qualification and then ultimately your interest rate. And if you're going to have mortgage insurance, highly influenced by your credit score. Gosh, now with, you know, free tools, people are more familiar than ever about their credit score. The reality of it is a lender pulls, we call a hard pull, meaning it's a full credit history. And there's a reason that the free sources have different numbers, because they're only accessing a subset of that information because it's cheaper for them or free, whereas there'd be a much higher cost if they were doing a full history. So sometimes the FICO score can be really different than what people think it is through Credit Karma or Capital One or whoever. You know, key thing is we love to be looking at this as early as possible for people as part of their pre-approving as early as possible, because sometimes there's things that people aren't even aware of on their credit report that can be fixed, but they always take time. Of course, we want the highest credit score possible. 740 and above is essentially, you know, where it doesn't get any better for most loan program pricing. And so that's our goal, is to get people as high a credit score as we can help them do. You know, down payment options vary by program and the sources of that. So I don't know, you know, kind of general comments are, you know, if you can get to 20% down, but gosh, it's so cheap right now. I do a lot of analysis for people and putting 5% down, but having mortgage insurance, knowing that your home will appreciate to that 20% value, and keeping that other 15% in the market or for the improvements or the things you want to do with the home can be really sound financial decision. And the sources of down payment, you know, typically are people's savings, but they can access 401k plans that they've had, certainly family gift monies. So that we talk through all those things to make sure people have access or you know, are set for their down payment. You know, do's and don'ts are listed here for you to read. I think, you know, we just, again, love to be involved early in the process to talk through these. So that I just had one the other day where I wish the client hadn't done something about a week before we got to work with them, because it's something now we're trying to kind of undo and fix. So, but it has to do with, you know, opening and closing credit. People oftentimes don't think of that as really a big impact. And frankly, closing credit, for example, removes that credit history from the scoring model. And unfortunately, while it feels good to, I don't use that card, I just closed it, that history, if it was multiple years and maybe you don't have that deep of a credit history, can have a negative impact. So those are the kinds of things that you can see in the do's and don'ts. I want to buy some books. Phil, tell me what I can buy.
Okay, you guys, you don't have to buy anything. That's what's great about these books. These are books that I put together about these topics. Okay, so there's a lot of information that we went over here. But the nice thing is the first book you see there, Selling Secrets, these are all the things we just talked about right now. And it goes into a little bit more detail. It's about a 100-page book that we put together of all this information for you to read at your leisure, how to navigate the home buying process, because the market has changed so much and the landscape has changed so much, and the lending procedures and the processes, that I just put it all in a book format so you could look at it that way. And then if there's inheritance or divorce situation, anything that's on the side that you say, hey, I'd like to know more about that, I don't want to go over it, but if you could send me one of your books, I'd be happy to read it. Or if you just want all 3 books, you can do that too. All you do is just let us know. You can email us at philr@johnlscott.com and say, hey, I'd like to get one of your books. I'd like to get the selling one, the buying one, or the other, you can call it, the optional one. Or if you want all 3, we're happy to send those out to you for being a part of the presentation today. Or just if you know anybody you think might need it, if there's anybody in your family that might need this information or need information from us or about us, you have it right here in front of you right now. And we're on your team. We're on your side. And like we said, we're doing this right now in February, because February, March is the jump start to the spring market. The values are high right now. As we get more inventory on the market, it's going to slow down a little bit. The other thing that Doug was talking about, as we get more, I guess, comfortable in this COVID environment that we're in, as people are now back to work, we're seeing e-commerce go again, things are happening. We're looking at inflation. And the thing that we're nervous about is if we get into too much inflation, interest rates are going to start going up to try to offset that. The other thing that they're talking about right now in Washington is changing the capital gains law. So if you're looking at it, maybe a sell your house to downsize, and there's some capital gains ramifications, there's a 15% taxation on that gain. We talked about it earlier, and I used the $50,000 gain as a scenario. The government now is talking about increasing that at a state level, 7 to 9% for them. So that could take capital gains from 15% to 24%. So these are just things they're doing, and they call it their COVID recovery plan. They're looking for places to do this, and they're already talking about doing it right there. So recommendation, if you're really thinking about doing it this year, we want to get the highest price. This is optimal time. I highly, highly, highly encourage anybody that's going to move to another house and get a loan to get your loan process started before you get into the home selling process. Before you bring a buyer into the picture, make sure that you're completely prepared. And Doug has already checked everything out for you, and you feel comfortable with the proceeds you're getting from your house and what the next loan is going to look like before you enter into it. Because I've had that, and I gave you a scenario earlier, but it's not the only one where I've had these kind of issues. So yes, please do that. And if there's any last words that Doug wants to give, he's right here right now.
Appreciate the time. I'd love to have more conversations with any of you that I can help.
Yeah, and thank you guys so much for joining us. If you would like a copy of this video, we've been recording the entire course, so just contact us, email either of us, and we'll send it over to you.
Okay, excellent, you guys. Thanks very much. Again, reach out to us if you need us. Other than that, have a great night. Today's Thursday, close to the weekend. Have a fantastic weekend, and we'll see you around the block.
Thank you. Bye.
Bye, guys.